FXBros.
What's up, everybody? We're back for another live session talking about these financial markets in general. The Australian dollar. It's August 25th. As we can see here, let me put it to the full hour. Currently, we are in this bullish leg that we had from Thursday and Friday, that led us into this 4-hour gap we had from the January 2nd. Didn't create a new high. Still can possibly do that. Didn't create a new high yet. I am currently in sales based on the 1 hour. The 4 hours not showing set up yet for sales. We didn't get a bearish engulfing similar to what we have here. We didn't get that yet, so these sales may be short-lived. We may be getting out of them. Probably have to monitor the 1 hour. I would say especially if we break above or close 68, and that's too high. I would say 67.95, which we're not far from. So we're gonna monitor that because we may get out of that as these bulls can still be active. As we see, I thought it was gonna be a sell-off after the Fed spoke. We had the Jackson Hole Symposium all last week, Wednesday, Thursday, and Friday. So he spoke. He didn't really say that they were ready to cut rates, but still looking at the data, the economic data going forward, will put them in a position to cut rates. And we just had to continue to see positive news releases coming out probably for the remainder of this quarter, I would say. I would think they probably not going to start cutting maybe until, everybody been saying September, but for sure the fourth quarter. So wait until October to possibly see, so they can see what the third quarter did and adjust the rates accordingly. But as of now, we are kind of in this little range up here. Like I said, last time we were here was July 11th. So July 11th, July 12th, we were in this range and we rejected it heavy. Only thing I noticed in this area, especially speaking on the 1 hour, we usually talk about the higher time frames, but looking at the 1 hour, even though we sold off from here, and that led from this trend line rejecting, but we didn't have a lot of clean traffic in this sell-off. If you look, the 1 hour didn't show us nearly as much as we have on this bullish run. Like this scenario here, we can't really find that too much. I mean, we do have this little leg up right here, but saying that to say we have way more cleaner traffic. It looks like it could have a free-flowing sale if it is, but we don't have it yet on the 4 hour, and I don't know if the daily is gonna set up for that just yet. Yeah, based on the daily, it would be ideal to see another bullish daily candle and that get engulfed bearish, and then we can sell off. Yeah, we have minor clean traffic to the left on the daily too. Let's look at the 4 hour from that. Still not as clean as we wanted. I mean, shit, it had more clean traffic for the trade into as we did on that bullish run, but still the same scenario applies for sales. So hopefully we get a setup that we can add heavy on on the 4 hour and a daily, but currently right now we kind of hesitant. And like I always say, we came this high, we came up here for a reason. And one reason would be to make a new high from this July high. Um, and the market like it can very much so easily do that. The only thing I can say that's going for it besides this strong bullish move, the fact that we did break out of this trend line structure. I mean, we could have respected it, but we broke through it. And like I said, if you're gonna break through a strong resistance support, you need a strong body candle to do so. And as you can see, the candle that did break this trend line was a candle that had a big body, compared to the wicks. Let's see what I can have. LE, what's up?
What's up, brother?
Ain't nothing. Yeah, I was just talking about that sale on the 1 hour. It's probably gonna be short lived because we don't really have a scenario for the 4 hour to daily to trade into bearishly. We still need more bullishness to get us a bearish signal.
Yeah, nothing's really, nothing's really set up as far as like a signal for sale. So
Nah, not just yet. Like I said, we had 1 hour, but that's probably just Sunday's news or Sunday's price action. About to start the new week, so probably have to wait a little bit longer to see what that does before we actually get into a nice sale situation. But I did enter in a tester on that 1 hour, so
okay, yeah,
we'll see how it plays into it.
for sure.
Same thing for the daily. Like I said, we would need another bullish daily close. Who knows where it can go? We probably have to look more into fundamentals to see, is this going in the trajectory of what the fundamentals are suggesting as far as for the US dollar. Looking at the dollar index. So basically, for this scenario to work in our favor, if we're in sales, we would need the dollar to be on a bullish run. That would create the sell scenario in this market. So, being that the market is still inching higher, we could expect that the DXY would be in a sale, and there you have it. So, as long as this scenario is being played out, buys they'll be short-lived. One thing I can say though, that's probably a first, and that might be an alarming thing to say, is that the DXY created a new low for the year, the low of the year. I mean, we've been kind of creating new lows of the year. Well, no, I take that back. This was the low right here on this candle. So we look at the 2nd of January, that Tuesday, that was the low of the year. And that low was tested and broke through last week on Tuesday. We ran back up to probably enticing people into the opposite side of the market. And that also came with a bullish engulfing on the daily for the DXY, but that later failed, didn't hold up, and now we are in that range, and that sell-off created a new low. And yeah, it's not the low of last year also too. That would be down here.
Yeah, that's pretty strong. So that bullish movement is looking a little more, more solid.
True, it is looking more solid. I would say it all depends on how far we can go. I mean, a lot of things are kind of riding on this one. We did get like a little gap, if you will, back here. Market tapped into it. Also returned back in here at the end of the year last year. And that's what started our other bullish trajectory to start 2024 right here, January 2nd. And the market never seen this price since then until now. We pretty much right around $100 for the DXY. I'm not sure as far as what that price means, what this $100 DXY as far as means for the value of the dollar per se. You know, I don't know if this is like an even situation, if you will. But nonetheless, one thing that does stand out, we did create a new low or sweep the low or however you want to look at it for this year with this move. So same scenario on the Australian dollar and the DXY. We would need another bullish daily candle, and then we could sell off into that, possibly create a bearish engulfing and potentially sell off. And the reason why I would that seems like it could be the situation is because this high is not the new high of the year. But on the DXY, this low is the new low of the year. So that's that divergence I was talking about. You know, before we even make the new high of the year, which is here on January 2nd, we will first need to break the high of July 11th. No, did we match that? The high was 67.96. This high was 67.96. So yeah, we did match that right to the T. So let's see how we respect that level when we get there, if and when we get there. But that means we probably, as far as the daily, I mean, well, really, we already in the daily bullish engulfing, so that speaks volumes too. Only thing is, we did it near the high, so you kind of got to look at it. How high is it going to go, being that it created that bullish engulfing?
That's a fact. Yeah, that's a fact. Like ultimate TPs are right there.
Facts, you know. So we gotta look at both scenarios on that. Probably gonna be more of a waiting game. Just see how this daily closes, because even on the 4 hour, we still need more bullishness for us to get a bearish engulfing. You know, we didn't get it right here with this first 4 hour Sunday close. Could have though. I ain't gonna lie, could have. Once again, the market is opening up with a gap. So like I said, this probably would have closed down here. Maybe that would have
been gapping left and right.
Yeah, every Sunday.
That's a fact.
Every Sunday. For the most part. There have been others. Probably more geared to news than anything, but yeah. So how would that look like for fundamentals though? If the Fed was saying, okay, we're gonna cut rates. If he said that during that meeting, we next rate cut, next news rates, interest rate for the USD, we're gonna cut. What would that happen? I mean, what would happen on on Friday if he would say that? Being that lower interest rates kind of puts people in the position to borrow more, and by borrowing more, that should create a bullish scenario in like the real estate market, stock market, new businesses, people getting loans from banks because money is cheap. So on the flip side, would that, increase the economy? I mean, when you look at the interest rate, a high interest rate, yeah, you get a lot of foreign investors putting their money into the dollar for that, for that offset of the interest rate with other countries. But is that going to create a bullish scenario just for our economy? And I guess you kind of got to look deep into that and also look at individual news releases like the jobs, new home sales, CPI, and all that type of stuff that'll go in line. And if that's the case, then I guess we could say we would see a bullish scenario the in the DXY.
If I had to guess, I would say yes, but I do not know.
I mean, if that's true, which I think it is true, then that would mean we would start to see sales happen in Australian dollar. So like I said, a bullish DXY means a bearish Australian dollar. They negative correlated.
Correct. Yeah.
You know. And then we can go back and kind of brainstorm on a little bit, but just kind of look at the charts. Look at DXY. When was the market bad? Let's look at the pandemic. Matter of fact, let's make it easier. Let's look at the weekly. Bam. 2019, end of 2019, we had I guess the initial scare right here, March 2020, when everything was like, oh Lord, what's going on? So the market tanked, dollar falling. As we know, the Fed injected a lot of money into the economy, as far as for consumers and also for a lot of banks. I think probably were on the verge of failing around this time too. So it was a lot of that quantitative easing. You heard me? Them niggas was doing, and bam, you see a run up in the dollar. April, May, June 2021. You look at the Australian dollar, 2021, sell off. After that run up, I'm pretty sure it was something had to do with probably increased rates that made the market sell off. They had to increase the rates because inflation was increasing also because everybody was just running up. You know, real estate was going through the roof. People selling houses in New York and Cali and putting down 20%, 30%, 40% down payments over asking on properties.
Hellcats all over the place.
You said Hellcats?
Yes.
Oh, Hellcats was all over the place for sure. Yeah, Hellcats was all over the place. A lot of vacations, just a lot of great things was going on. But to fight that, because jobs wasn't increasing with all that, nobody was really adding jobs. People wasn't really increasing in wages. So how in the hell was the economy booming like that? So they said, all right, bam, we're gonna raise the rates. We're gonna kind of force these niggas to stop spending money. But that really wasn't working, and it shows because if it was working, the market would have tanked and kind of fell back into these levels around before COVID hit. You know, probably right around here in this range, which we never even tapped into that area. So with that being said, if we get more positive news and more bullishness as far as the Fed starting to cut rates, inflation starting to come down, job growth is increasing, then we should see a tick up in this market. And as you can see, we've been in a lot of rejection from this area. So
I like that, man. I really like that. And yes.
Once again, we back down to this rejection in this consolidation where the Fed was just kind of fighting the economy with interest rates and inflation. This is all a fight right here. The market, the economy, the dollar don't know what it want to do. You know, it's kind of steady. And I guess if we get more of that bullish news that the Fed wants to see, then they'll start to cut rates. And that should make the dollar go higher and make the Australian dollar start to sell off. And I'm done, and the live is over with. See y'all next week.
Do you have the hand clap sound? Like, come
Hold
on.
up, man. Hold on. Tripping. I got hold up.
Oh, man. Beautiful. Beautiful.
I forgot I got the reaction thing.
Just goes to show, man, how these Sundays are so helpful. Or if it's not a Sunday, maybe it's a Friday, right when the market closed for some folks. Maybe it's Saturday, but just to give yourself some time to kind of like view, the charts. Like I said, we were just going strictly on technicals just now, a little bit of fundamentals, but didn't even look at the news yet. So, but just thinking, just to look at the technicals, knowing what it did last week. Looking at these larger time frames too, it it just helps out a lot. So,
Right.
don't really want to get caught up in another thing on top of that after you do that for the week. Because that was just, that's pretty much what this is, a weekly analysis. We do these on Sundays, so we are planning ahead for the following week. And every day, take a look at the news, and see what's planned. Things can change, as we all know.
What was that? That was the 2 weeks ago?
um,
Had to be because last week was the Fed. Oh no, was that Friday?
no, that was 2 weeks ago. So that was because it was the revision of NFP.
Right. So that wasn't last week. That was the week before that.
It was a week before, because they did that the week bore symposium. So I was probably saying Jerome was like, let me fix these numbers before I start running it with these boys.
Yeah, bro.
So yeah.
And the market went crazy when they did that. I was like, what the
Super crazy.
oh, thanks.
Yeah, but no, that was an amazing analysis. If that does happen, that'll whatever happens. You just got to make sure now when you can take a look at that, price action and break it down, and you can have somewhat of a bias on both sides.
Mm-hmm.
From there, that's when you have your setups or playbooks, as people say, and when those setups happen, depending on if it's in your bullish or bearish bias,
Right.
determines how you're going to execute. And I know another term, the A plus and B plus C plus and all that, will determines your risk. I understand that part of things too. So if it looks really good, you got clean traffic to the left after an engulfing with volume, sweet, 4 o'clock, 8 o'clock. Those are good, but
Got more
amazing.
traffic to trade into from these previous weeks than this did.
Wait, say that again.
I said we have cleaner traffic from the previous week to sell into than this scenario did.
True. True.
Yeah, man. I mean, we got especially if we do get that sell off. Granted, it is a good ways away, but we got this crazy wick fail that was the creation of our recent low of the year, which caused this run up. This was that news release, I think, right? Wasn't this that I think this was that
Wednesday.
yeah, was it? I don't know. I forgot what day it was. But when they had their revision.
Yeah.
I know it was like a wick that dropped down and
Yes,
yeah.
that was it.
Yeah, I'll put my notes. Yeah, I think it was this right here. Yeah. I remember that thing. Yeah.
Crazy.
Yeah, crazy. Still, we was in buys though, but that would have been like, ooh, stupid dumb entry. Like 120 pips in that candle, I think, something like that. Maybe not 100, but it was a nice move. Yeah, like 60. But yeah, man. I think overall, if we're not gonna continue higher, the market did do a lot of bullishness. So it's due for somewhat of a resting period. And we saw it right here. Market wanted to kind of rest and reject, but obviously it wasn't done. Obviously, we still had to wait for that speech.
Yeah.
This was Thursday, so you know the market was probably like, okay, and this candle right here was this was Jerome's candle. That's all I'm gonna say.
I like that.
That's what brought it back. I don't know if I told you last time I mentioned this. It was a while back actually. That these candles, these impulse candles that Raj be talking about sometimes, it was an impulse based off of news.
Right.
Sometimes what I like to do visually, and it's hard to do it. Just you have to just really be visual. I like to erase this candle. Like this is like BS. And I look at it like the market is really, if I take this little conjunction and connect it down here, I feel like that's what the market really is. Even though I know you can't really say that because this is price, but we didn't get here on real market data. We got here because Jerome was talking.
Yeah, we got that off of emotions and
emotions.
Yeah. Yeah.
So that was an emotional move. And we already saw the resting period or the potential, turnaround. Then one could say that we are due, even more so for a sell-off. After the market created this high, taking out these stops, enticing people into buys. I know people are still in buys and eating right now. Get your money, but just understand that we've been going through this bullish run since August 5th.
Yeah.
And pretty much the whole month of August. Yeah, that's just 1 month. Damn. Yeah, that's just 1 month. It seems like it was more than 4. Okay. So yeah, that's 1 month. So that's the monthly. Let me take a glance at the monthly, man. What that really look like. What that really look like. Yeah, because if we look, we've been in bearishness since 2021.
Wow.
It's that run up from was that the pandemic? Yeah, that pandemic run up. They started increasing interest rates. Inflation was high. So yeah.
Yeah.
We ever since then, I could say in June we had a bearish engulfing. That was June 2021. Came into the new year, followed by April 2022, February 2023. We have here starting out the year 2024. Continuation with the July, but then we have August and hold up. And I mean, one could say it's a lot happening in August, especially if you want to throw in the Jackson Hole and the Fed speeches that happened multiple times during this month.
Yeah.
This was a big month, an important month. And as you can see, the market was really tailored to go lower. But August changed all that in a big way. And then looking at the monthly, I feel like it does potentially have a more high chance to create or to break this resistance area right here we see. Like I said, it could tap higher, as high as 69 cents.
Yeah.
Keep it all the way real. We could get up there before we see sales. So keep that in mind. If this scenario doesn't work out in our favor, yes, we still probably could be running up another 6793. What is that? Like what? What did I say? 69. So that's 100.
69. Yeah. Yeah.
100 still pips away. So that's nothing. We could do that in 3 days. So the scenario could be for this week if looking at the monthly, this week could be another bullish week, and we could see the sale set up at the end of the week. Like the rejection we see on Friday, the pullback from whatever the market does all week, we probably could get that on Friday. So
put that weekly up again.
Weekly engulfing, new low of the year, all in this month.
I could see a bullish weekly doji.
Similar to like this. Doji, yeah.
Yep.
So this would be like a reverse pin
Yep.
bar.
Yeah, it's kind of like that.
Okay.
Yeah.
Both of those scenarios will work though.
I know.
Like this pin bar or this like a doji candle like this, both of those scenarios will work in this area, for sale.
Okay. But yeah, I can also see another solid bullish candle as well.
Facts.
So
Facts. Just to tap into 69 cents.
that's for sure.
Just like right about here. So
or it can wick that way as well.
True.
But if it's that size for a week, we just have to see. Let's check that news out, man.
Let's see what the news doing. I think last I checked, this was the biggest weekly candle we had so far for the year. And now, not looking that way. I mean, I'm not sure if this one is larger than this one, but this move is definitely larger than this one.
Yes.
Not the bodies, but this move.
Just that entire movement, yeah.
That price action is definitely larger. All right. Let's see what the news is talking about. So tomorrow we do have news for the USD at 7:30 in the morning. We got durable goods coming out month over month, excluding defense excluding transportation. Not gonna say if that's gonna move the markets in it as much, but I mean it's a high news release, so we gotta take it for what it is. Tuesday, monthly CPI indicator for Australian dollar at 8:30 p.m. Followed by Wednesday with nothing. Mostly a lot of euro type of news.
Which is important for the EJ pair.
Yes.
Really important.
We're starting to learn to follow these European news releases in the yen.
Yes, I added the same to my calendar.
So as we dig deep into it, especially on the fundamental side of the European economy
and it's especially if you're gonna trade that time frame.
True. Yeah, because we typically not really trading this time frame. We, for the most part, sleep, chilling. So that really won't entice us. I mean, I ain't gonna say it's not gonna affect us, but it won't entice us to change our bias or anything because we're not up looking at the market. So we'll
set your stop loss and take profit at a good area because you're gonna be sleep when news is gonna be popping. So
facts.
Yeah.
So but to add to that, following Thursday morning, we do have a lot of CPI information coming out. On the euro.
Nice.
So that might move the markets, and it's coming
For
right
sure.
out
For sure,
European markets. London session. Heavy in the London session, 3 a.m. Unemployment rate also coming out. Inflation rate all coming out. So yeah, that's definitely gonna be a heavy movement for EJ. Of course, Thursday for USD, we got our continuous jobless claims. This news release comes out every Thursday. We already know. Followed by goods trade balance and GDP growth rate quarter over quarter. So we're gonna look at what quarter 2 did. as we're approaching the end of quarter three, or the mid quarter three. We still got one more month. Still got September. And then to end it off is 8:30 retail sales month over month for Australia dollar. On Friday, we'll be looking at consumer confidence on the yen. More news for the euro. You have unemployment rate and change coming out for the euro, CPI coming out for you. As you notice, the European economy is compiled of a lot of different countries. As you can see the different flags. So when you get CPI for euro and job data for euro, it's in a lot of different, categories, if you will, because it's in a lot of different countries. It's not just
Yeah.
European country, like America has. And then Friday for the USD, we have core PCE, personal income, in the Michigan consumer sentiment. 7:30 out on Friday, 7:30, and Michigan consumer sentiment at 9 a.m. And that's gonna close out the week.
Okay.
Yeah.
Nice.
So nonetheless, as far as for the Jappy pairs, I would say for sure we probably go get some moving in EJ.
Okay.
For sure, for sure.
Let's get it.
And being that we're talking about the EJ, let's pull that up and see what it's looking like before we step into that news. EJ. Bam. EJ is starting to sell off. I see when I know news is coming out, important news, and I see the market is trending, it look like it's going there to set up for the next move,
Oh yeah.
So it's kind of like it's showing its hand, like it's going to a scenario to buy, to buy from.
Right.
You feel me? So the news for
you had the chart. Oh, never mind. My bad. I didn't know if you had the charts on.
Did I?
You didn't. I didn't know if you.
Oh, okay. Let me. There we go.
Okay, cool. Yeah, that's the EJ. All right.
I appreciate that. But yeah, the market is selling off. Like I said, we already did. I believe I initially had buys for the EJ around this area. I was waiting for the market to reach here from the end of July, and once we tapped into that, got into buys. If anything, if the market was going to reach for an area, if not just sweeping these lows, I could see this scenario. You might see it already. This scenario right here.
Seeing it hit that.
Yeah, I want to see how we react from that, especially with the news releases coming out. I mean, like I said, we could dig deep down in here again, but it already did what it needed to do. So it could come right there again. Not saying that it can't, but this area still is a nice little area to be filled. We did tap into it right here after we created this gap that the market, never saw that price since then. But now we are starting to get sales back into this range, and potentially once we come there, we might see some bullish setups that we can jump into buys or add to buys, or however you're looking at it on the EJ.
I think that'll be one of those ones, boy.
Yeah. And we have the first level of news that's going to be heavy as third. So really,
should be the same scenario for all of those.
Yeah,
Japan pairs. The only difference is the euro has more news. So with the UJ and GJ, I would say the EJ and the GJ would be the best bet. The UJ,
it's still going up the dollar.
Yeah, it's gonna go with the dollar and stuff. But it's still a great pair. So yeah, I mean, by all means, trade.
I mean, if we look at them, let's look at that. So we got EJ up. Let's look at AJ. See, AJ is not that much more into sell. Like EJ is really trying to dig deep into that sale so they can get a great price to buy it from. You know, that's they
Right.
like to buy at discount prices. You feel me? So even if I'm gonna look at it from a range, and I don't do this often, but you know, when you're looking at it from a discount and a premium, you take the low and the high, and you go 50%. And by golly, where does that 50% level line up? Right at this gap. So what they would like to look for is look for buy scenarios underneath the 50%. This is a discount. This is a premium. They want to sell in a premium. So that's why you see sell opportunities in that premium. And then we want to see buy scenarios in the discount.
Gotcha.
Underneath 50%. So that lines up perfect for that gap. So we're going to keep an eye on that. Throw it in the chat, Telegram once we do hit that price. And see it, like I said, if we start to get bullish reaction, bullish engulfings on the 4 hour and the daily, then you know we could go with that move. And you know the EJ runs once it's ready to run.
Yes.
You know, 100, 200, 300 pips easy.
I like that.
Like I said, AJ still hasn't broken any strong structure yet. I would say probably right here would be the next level, especially with this Rick rejection. This would be the next level to really show that the Bears probably have some control right now, even though they are kind of, if you look at it on this scenario, it's kind of like it's trending down, but it hasn't really broken any strong support just yet.
Right.
This is kind of support if you look at it, but also it's within the whole little range, you know, if you look at it like that. So as far as these levels of bullishness, this would probably be the first level before we start to see that the Bulls have, the Bears are starting to take control. So we would need a price to break through 96, 99-ish, 97 cents for us to be in a true bearish scenario. As far as any gaps to fill, we possibly could come down here, similar to the scenario on the EJ right here.
Yeah.
Tuesday, August 6th. Let's see if I can up. Tuesday, August 6th, yeah. So let's go to GJ. GJ kind of similar with AJ, not too much of the bearish structure being tested or broken just yet. I would say until we get to 188.95 and have a close below that, then we'll be talking. As of now, that's not the case.
It's getting ready.
It's getting ready. Also, we got an August 6th gap that we probably could reach down into. Like I said, that scenario won't play out until we break this support structure. So until we break this, we won't even be talking about coming down here to look for buys. As of now, everything is looking still bullish. We still could pop up, create a bullish engulfing, and go high.
And we look at UJ too, huh?
No, I'm going there next. I'm saving that for last.
Gotcha.
That's the last. So we go to UJ. Bam! Look at UJ. UJ done broke all kind of structure.
Yes, it did.
Now, see how different they are? Bam.
Yes.
Bam. The only one that's kind of similar, and that's a stretch by saying kind of similar, but EJ does have some sign of structure. Even this is like an internal structure within the bullet structure. So this is not, it's like a level 2, not a level 1 structure. This would be like a level 1. This will be a level 1. This, structure points like those stairs leading up into the floor. This is not really that. So yeah, a lot of tricky shit going on. But the UJ is definitely in sales. But why is this market selling off so much?
Because of the USD, baby.
Come on, man. The USD. Now, the USD is in the beginning of this pair. We trade the Australian dollar. So when the dollar falls, the Australian dollar should go up. When the dollar goes up, the Australian dollar should sell off. That's the flip side for this. USD. If the dollar is falling, the USD is falling. So we look at the USD right now. We're seeing the bearish scenario. We go up to the dollar, falling. The dollar is falling, but the Australian dollar, bullish. So that's just that positive and negative correlation, you have in those pairs according to what currency is first in the in that pair, in that traded pair.
Okay.
Simple way to look at that. One thing I could say, I mean, it's not by much. It's like weak as hell, and I really don't even want to put it out there, but we do kind of have like a little gap right here. If I draw it out. But like I said, if the market go come this low, it's probably going to tap into that larger scenario from here.
Okay.
This scenario, this daily gap we had over here in January 2024, that the market was, that's the beginning of the year. Market finally tapped into it August 5th. And then we had that run up. Now we're coming back to this range. Now, like I said, we might not tap all the way into that. We might respect this area. We might come down here, dig a little deep in here, and then give us a bullish scenario on the daily. So we're going to monitor for sure UJ and EJ.
I like that.
GJ and AJ should respectfully continue to go bullish if the same scenario plays out on the UJ. So EJ, we might get enough news that continue this bearish trajectory until we get down to this price level, and then we start seeing bullish engulfings, and then that will also create more bullishness for the rest of these pairs, because what would be anchoring this to go higher, and what's also connected to all these pairs is the Japanese yen.
Right.
So just like if we look at the UJ, the yen on all these pairs is the secondary pair in this, in this traded currency. So if the yen is bullish, then all these pairs would drop.
Gotcha.
If the yen is bearish, then all these pairs would continue higher. So we pull up the yen. For the most part, the yen is pretty much bullish. So that would mean all these would be bearish. And as you can see, they have been. They have been. They have been. They have been. And I'm just strictly speaking on this leg right here.
Yeah. Yeah.
So the only thing about these scenarios is just that the UJ and somewhat the EJ, but for sure the UJ is really down to its area where it already rejected once. I know the market likes to repeat history, or if not repeat it, it rhymes, like they say in stock market.
Nice.
So if that's the case, we should see a nice rhyme, a nice little 16 bar first verse from the Japanese yen and the US dollar that will lead us into a bullish scenario to fill this traffic, that traffic, that traffic, and that traffic. So nonetheless, for that to happen, we need a bearish Japanese yen. And I don't know about you, but looking at this chart right now, it looks like it has a lot of clean traffic for it to go bearish. That's all I'm gonna say about that. And if you just want to look at history, what trajectory are we on in? Look like the it's coming from the top going down. If I'm not mistaken, that's a bearish move. So hopefully we continue with that trajectory and the yen continues to fall.
Lower highs and higher lows.
Big facts. And I would say what's really kind of playing into this too is, if you look at the Japanese yen interest rate, they pretty much are the lowest amongst all countries right now. So for sure, their dollar is not getting pushed up by the interest rate alone. I would say if anything was helping them, would just be the mismanagement of other countries and the fact that they kind of more self-sustain in other countries. You feel me? You know, but all economies are having an issue right now. It's just that being that the U.S. dollar is still the dominant currency, um, whatever happens in our economy is going to affect everybody else. And even though that sell-off we did experience right here, people were talking about probably have to look it up on YouTube to get more of a breakdown, but the yen carry trade scenario that that created this bearishness, that could have just been a shock to the market, a market event for the yen, but ultimately, if not that, it was a perfect scenario to sell off because we, came up to a high. And markets tend to sell off when they reach another point that previously it sold off from. So you could call it anything. You could call it the carry trade, you could call it take profit, you could call it this or that. I ultimately feel like the market is gonna do what it needs to do, whether it's a human induced or a algorithmic induced type of move when price presents itself to do so. Like I said, history repeats itself. I mean, look at our scenarios. Markets reach an area, like it don't have to be to the T, but an area from where the market previously sold from. Reached up there and previously sold from, reached up there, sold from, right here, sold from, reached up here, sold
And
from.
then in all of those candles, they're small. The same exact thing are happening on the smaller time frames as well.
Facts.
So it's like
Big fact.
multiple,
Big fact.
every candle has its own pulse.
Oh, that's true. That is true. Yeah, man. Looking like the Bears are starting to be a little active. Not by much. I'm just getting a little excited. That's all. But yeah, man. We overall, I mean, yeah, I would like to see the market go high. I'm not gonna lie. I'm in sales. So yeah, I want the market to go down, but I'm not a dummy. I'm not gonna just be like, yeah, come on, trade off, come down. But I wanna, we like real sales. We like engulfing. That's our strategy. That's when we know we in it. When the market engulfs a previous 4 hour, daily, weekly, our strategy shows us that history has shown that engulfing patterns hold a shitload of weight. So we want to wait for that scenario. Do we have that? No, not on the 4 hour or the daily. And the market could sell off and we could make all kind of money. That's great. I ain't tripping on that. But our strategy is the engulfing, like I said. So in a sense, it's kind of like we use that to not get food. So, it could sell off. Everybody could be selling off, but who's to say the sell off is not to go higher? Because trust me, after this market, if the market does sell off from here and everybody in buys, everybody gonna be talking about buys. But nobody gonna be talking about the potential of a furthermore extreme bullishness if we tap into maybe sweeping this low and continue high. Maybe the market just needed to retest. It already ran up a nice little bit. And as we know, central banks and the large institutions of money can't take off a trade of the size and the caliber that they trade in one click. They got to do it in chunks. So if this sell-off scenario was one piece and they're gonna make the market go higher, so they can sell off another piece, and until they're completely out of that bullish, trajectory. And they base off of their moves and their ideas off of economic data like the interest rates primarily, and different job data that comes out, and CPI and all that type shit. So overall, you got to learn how to trade like the banks. And you don't have to know somebody that worked for the Fed or in the economy to know how the banks trade. All you got to do, you just got to know how to read the charts. Simple as that. Because whatever they do gets printed on the charts. It's like the ledger right here. If you know how to read it, and if you don't know how to read, we can help you.
Yeah, I would almost say don't even trade. I mean, yeah, for sure, trade like the banks, but nobody will be able to trade like the banks.
No, yeah, not in the sense of just verbatim trading like
right, but understand.
Yeah, you need to be on the side with them.
Yeah, I was about to say, yeah, so that way you can be. You don't have to be the banker or whatever. You can be the janitor.
Come on,
that's like just getting you. You know what I'm saying? A little bit after hours when nobody there.
Right, because the janitor still hear what they talk about on the elevator.
Come on,
you heard me.
That
ain't inside of trading. I don't know what it is.
Yep. Don't even. They don't even think you exist.
Facts. They just running
it. Unless if they make a mess.
Nah, real talk. Real talk,
man.
Real talk, man. Yeah, let's take a look at some other things we probably don't look at too much. S&P took a little sell-off. Now it's starting to eat that price back up. Didn't make a new high just yet. Probably will soon, because S&P been strong. I mean, look, it's not even on the charts no more. Look, this 2024 and the S&P not even on the charts no more.
Wow.
You gotta zoom.
Damn.
Crazy, boy. That's what created the billionaires right there. This shit. And then you zoom out. This shit, not even on the charts no more.
Damn, that's crazy.
When was the last big crash? 2008? Did our charts go that far back? Yeah. Bam. Look at that scenario. You see how structure is being broken?
Yep.
Structure, what they broke structure from 2026. Structure was broken. Well, I don't know the rest of the year, but for sure 2024, maybe 2020. 2003, 2004.
Yeah.
Probably was the latest, but all that from 08, when the economy fell, due to the real estate market. But from that point, just take a glance as I scroll through and look at the bearish structure, like real key points, and see if you see any scenario where the market really just wiped out levels. The only thing I could see would probably be right up in here. And what was that?
COVID.
Come on, man. Yeah, you could say this, but this was nothing more than just a sweep of this.
Actually, that was the beginning of COVID. Then that drop. That's what that is.
Facts.
And then that's inflation afterwards.
Facts. There you go. Go. Now you tapped in. You already know, bro. You already know. You see what they're doing.
Yeah.
That's the inflation. That's the bullishness of the stock market. Everybody took all that money because quantitative easing. Like, oh, money cheap again. Everybody get $1,000 a week from the government. Oh, snap. Crypto. Oh, snap. NFTs. Oh, snap. Everything run up. But it swept the true structure. I was watching this economy. this was an economic documentary, and this one lady, it was like 2 hours long, but this one lady resonated with me. She was like, and I felt like this, I always still felt like this. 2019 price action,
Yeah.
all this is real market. After COVID hit and then that inflation period, that's all mystery. You know, there's this. That's
Yeah.
what it is.
Yeah.
So in a sense, if you really want to be real, there is a potential for the market to correct itself all the way. Like, that's not scary. Granted, it is scary, but that's really not scary. For the
Right.
market
Right.
to correct itself to 2018 levels.
Damn.
I'm gonna be real. And what would that do to the economy?
That
To
was.
Nvidia, to
Yeah.
Tesla, to Apple.
Yeah, boy, that'll be a bomb.
Catastrophic, nigga.
Catastrophic for sure.
Real tough. So if you really want to be real, that's where we really supposed to be. I mean, now granted, true, the stock market is engineered to go higher. So yeah, we probably would be somewhat higher. But if the market was going through an inflationary rate level, probably not as inflated as this, but just a normal inflation rate, you know, then the Fed would have to fight it with high interest rates and all that shit, and we would just kind of be in a consolidated situation, not this.
Right.
So just keep that in mind.
For
Yeah,
sure.
when they say the S&P get down to 2,800, 2,400, even 2,000, and everybody, and there's blood in the street, people slicing throats,
Bruh.
out of windows. Don't be scared. You know, be strapped up, be ready for the dumb shit, but also be strapped up financially and load the boat.
Mm-hmm.
Because I think even though the bullishness we've seen from the the crypto markets and everything, a lot of people say that was the move. That 10 to 20 to 30,000 crypto price when it ran up and never seen it, like that was the move, like unprecedented prices. But we could also, say that there is a correction that needs to happen. It's all good when we making money. I ain't saying that, everybody get your bag, but when shit inflated, shit inflated. And I put it like this: I've never seen a bubble that didn't pop.
Mm.
I'm gonna just say that.
True.
You heard me? So
And eventually it will pop.
big as we want to, but
Yeah.
all bubbles pop. Like when you blowing bubbles with Dakota and Taylor, you mean like, come on.
Yeah. Eventually they will land and pop.
Come on. They don't float forever, fam.
Or
So,
in thin air. Yeah. You're right.
so we just gotta look at it from that standpoint. Like I said, nobody wants that. Everybody wants the market to go higher, and it should, and it
Yeah.
will. But when you overinflated, you overinflated. And truth be told, I hope it don't go down. But on the flip side of that, just being real, we got to get a handle on the debt that we running up.
Thanks.
Or they just gonna wipe it. They're just gonna have a whole party. All the countries come together and be like, man, I know I owe you that 34B. I mean that 34T. I know but what if we just said we good? What if we did, like, start a whole nother convention? Like if we had the Geneva Convention, let's start another convention of all the countries, and we just we call it the Clean Slate Project. We call it the Clean Slate Project, and everybody start off with a clean slate.
Clean house, reset.
Reset. I'm gonna hit the reset button on it there. You heard me?
Reformat the disc.
Facts. I would say the only country that would probably be like, hell no, is Australia. We'd be like, nigga, we good.
Yeah.
Like, we don't want to reset nothing.
That's a fact, man. Just give me y'all replays. We'll live off of those, man.
Oh. Yeah, man. Nvidia looking good. Lyft. I still like looking at that, boy. You ain't called that shit from their earnings.
Yep.
In August.
And it went. I mean, if that was an option, yeah, it went crazy.
Oh yeah, and Uber went even crazier.
Now, yeah, Uber is like, yeah, Uber's chart is actually looking really good.
Uber went crazy after earnings. That was a fire call.
It's all good.
TSM,
Yeah,
the God company.
yeah, TSM is amazing. Yeah, they be, yeah,
Yeah,
they amazing.
this was holding AI afloat. As long as they good, we all good. Because without TSM, you wouldn't have Nvidia.
Right.
Keep it real. Without TSM, you probably wouldn't have Apple.
Yeah, like so many chips companies.
Real talk.
Yeah.
Real talk.
Yes, sir, man.
But yeah, man, it's So I guess to wrap it up, overall, what we would like to see out of Australian dollar is slightly more bullishness, maybe even just one more daily bullish candle. Um, 4 hour probably give us some more bullishness, at least two more bullish candles before we get a bearish engulfing.
Yep.
And something to play into. Because I mean, hey, we could go high. I'm not gonna say, we've done on the bullish side, but we've did a lot.
You did a lot. That's why I wanted to.
So when you do a lot on one side, you got to do a lot on the other side.
It's a fact.
Keep it all the way around.
One would say kick back and wait till next month. We got the end of this month. Let's see what can happen this week.
Yeah, I ain't gonna lie. I like how you said that, bro. I'm gonna keep it
last week is going into the holiday.
I like how you said that.
So yeah, Sunday, Monday markets will be closed, so no activity.
I like that, and that's why I was almost about to say, especially for EJ and probably most of the other pairs in the Japanese realm, Thursday is when they gonna start having heavy news for Euro.
That's true.
So
that'll be those will be good pairs.
Even more so playing into the scenario of just waiting for the month. Just let it play out. So we all about to start a new month, and not only the new month is going to be the close month of the third quarter. That's going to close out that third quarter too, and get us ready for.
We saw what patience did when we waited on this bullish move that we got. So we got to be patient for the next move as well.
Mm-hmm.
It takes time for these plays to happen on the larger time frames, but when they do, you also have to have the patience to let those trades play out. Right. Because just how long you were sitting in those trades, waiting for those trades to happen, a setup, you can sit in those for the same time or even longer sometimes. So, yeah, man, patience pays for sure.
Patience does play. Yeah, man. With that being said, bro, I think we're gonna wrap this one up. Next week, hear me? I don't know. We might have a unorthodox live. Most likely we will. We're gonna do it, but we might do something different. We might, it might be on the beach. Who knows?
Might do something.
On the beach, man. We're out there.
Gotta change the weather sometimes,
I'm gonna be in New Orleans. You heard me, next weekend, so we're gonna be doing it probably for show together live, and then the weekend after that, go be in New Orleans. So we're gonna be live together again too.
Yes, sir.
So it's gonna be lit.
Yes, sir. Isaac Newton.
Nah, facts.
We continue, man.
That's a fire ass design.
All right.
Sir Isaac Newton with the Newton shoes on.
Okay.
I mean, don't do it. I got
like a good week and a half to cook. So
I'm just saying that's a fire ass shirt. Hold up.
Come on, man.
Isaac Newton. Nah, that's what's up. That's fire. I like how you said
that. We could build on that. But
yeah, speaking of building, you free?
I got time, man. I'm good. Yeah, I got everything situated. Got a championship game tomorrow, so I got all my stuff set up, packed, ready to go, man. So
Thanks. Well, shit, I'm gonna tap in with you after we get out the live.
hit me up, man.
All right, bet. All right, y'all. Peace out. We see y'all next week, next
Peace
Sunday.
out, folks. Audi.